So we are on NISM, we are studying NISM Certification Exam Mutual Fund Foundation 5B. We are discussing something called as factors to evaluate savings and investment products, and this is our 7th video on this subject. What is the topic which we are discussing today? We are discussing something called what do we mean by ticket size, or something what is called as ticket size. This is the factor fifth. So what do we mean by ticket size? Ticket size means the minimum amount required for an investment. How much is the minimum amount? कितना पैसे से मैं एक investment शुरू कर सकता हूँ? That is a ticket size. The minimum amount which is required to do an investment. Let's just take some examples of different investment products and their ticket size. For example, mutual funds, where there is something called a SIP, which can start off with as low as 100 rupees per month. This can be in equity, on debt, in hybrid, or whatever funds we are talking about, and we will discuss about these funds little later. Postal RD, it can start off with as low as 500 per month, and the same can be with the bank RDs also. In real estate, nothing comes for less than 20 lakhs or at least 20 lakhs or above. Even a piece of land, if we are talking of, will cost you that much. Or if you are talking about a small flat, 1 BHK flat, it will cost more than this. So you cannot invest anything in real estate without investing so much of money. But if I go and buy stocks live from the market in the secondary market, I can buy penny stocks. Secondary market means Bombay Stock Exchange or National Stock Exchange. The BSE or the NSE, I can buy a penny stock with as low as 5 rupees per share. And I can pile on that slowly and make a big corpus out of it. I will not advise you to go for penny stocks, but this is for an example. I'm saying that this is the spectrum of investment which is available, as low as 5 rupees, as high as crores, 2 crores, 5 crores, 10 crores, in real estate, in gold, some lakhs, and so and so forth. So the point is, why are we discussing ticket size? We are discussing ticket sizes because ticket size is a very important option while making an investment decision. Suppose you want to make an investment decision of investing in real estate, but you cannot afford it. What is the point? So you should know which investment option and how much is the minimum amount to be invested in that. So that becomes a very important criteria. But note, this is not the only thing one should look at. You should be cautious. This is not the only option to consider before investing. Investing सिर्फ इस चीज पे नहीं देखी जाती कि whether I can invest in that, whether the ticket size is good enough for my investment, I'm comfortable as per the ticket size or not. But there are other considerations which has to be seen, for which you are getting trained as an advisor. You have to look at whether that investment is appropriate or not for the investor or not. When we use the word appropriate, we have to look at two things. Thing A is whether it meets the goals which the investor has, and thing B is whether it suits the situation, the financial situation and the economic situation of the investor. Let us take an example here. We are talking about a young couple who has just started off, they're newly married and they've just started off a life of their own, independent life of their own now. They have their financial goals coming in front of them in 5 years, 10 years, 15, 20, and the biggest of all, their retirement goals. So they need to invest now, but they do not have large money. They have to start with something called a savings product. And savings in bank would not make sense. Savings in equity will make sense because in long term equity yields the best returns in the market. So you would advise them to invest in through a SIP or something like that, or pile up with stocks slowly in a saving mode. But if you're talking of a retired couple does not need to save anymore. They are retired and they need regular income every month. Like in January, they need regular money. In February, in March, in April, they have to live off through their savings and investments. So they are the people who are looking at current income or regular income. So if you advise them to invest in equity mutual fund in one lump sum, you would be nothing but a foolhardy to do that. But if you tell them to invest in debt fund and do something called as systematic withdrawal plan, opt for systematic withdrawal plan, you would be wise. Some portion of their money can be into equity trigger, like 10% or 20% of their money can be in equity, and that can yield a better return on a long term for them, so that the risk of living long is taken care of from the same corpus. So such type of goals and situations you have to look before you advise the product. It is not the ticket size alone which is an important criteria. This is all for this video. In the next video, we will cover factors to evaluate savings and investment product, and the factor is the factor 6, which is the taxability of income. Thank you.